You're watching Business Incorporated live from Channels HQ. Coming up, IMF approves $3 billion extended funding for Egypt. And the World Bank supports Ghana with $13 million grant to develop plastic recycling economy. Plus, electricity bills hit record high during December in Kenya. Hello and welcome to the program. I'm Ladi Williams. Let's kick off now with the markets. We start with the African continent there. Right behind me, you can see the NGX still maintaining bullish sentiment. They're up 0.12%. And the South Africa index, 72,758 points. That's down 0.39%. A flip over to North Africa there, we'll see the EGX also down 0.46%. And Kenya closed negative. That was on Friday, down 0.33%. Let's take a peep now into the NGX market. There we have Abdurrashid Momo join us via Zoom. Great to have you on the program.
Good morning, Ladi.
Good morning.
Good morning or good afternoon.
Oh, good afternoon. Actually, good afternoon. Apologies there. So, check-in sentiment earlier when I took the, I looked at the market, it was up, about 0.12%. But what are you seeing?
The market is still up by 0.15%. That's about 73.59 points so far. The market is still doing well. I listed it last time we spoke. I've seen iron about the 50,000 point range. So far, so good. Most of the indexes are on the positive, except NGX Insurance and NGX Premium. So far, so good. The market is still, the uptrend is still going to continue. Perhaps when we hit the 50,000 points range, then we might start seeing another story. But for now, it's all bulls, bulls, bulls.
And the last time we spoke, you did say it would hit the 50K level by hook or crook.
Hook or crook. I'm still waiting. That's why I said, so far, I'm waiting because really, if you look at the whole market scenario, in May, when the market was down, the market moved from about 54,085 to about 43,000 points from May to November. And if you look at the market has shown some tremendous climbing from the second week of November to date, and the 50,000 points, actually, technically, it will be about, we call it about Fibonacci levels of 1.8. So we expect at least to hit about 50,000 points. From 50,000 points, we might not start seeing another story, whether it will be a continuation trend or it will be a form of retracement. And note that most of the financials will hit the market soon. So basically, everything has been priced in for most of the rallies that we're seeing so far. So far, so good for the past, in just give or take about 1 month, November, middle of November to date, the market has done so well. From about 6 months loss, in 1 month, we've actually made about 50% plus of what we lost. So I think
quite a big move.
Looking very good.
Well, quite a big move. I'm sure you would be expecting a bullish close for today.
Yeah. You see the way it works. You see, if you notice stocks like different sector has the way they outperform, they help in the growth of the overall NSCSI. Apart from, you saw what Boa Cement did last Boa Cement. Now Boa Food has joined. We saw the rally from Zenith. You understand? Zenith is now taking a rest. Now the next ones that are moving now, we are seeing stocks like Los Bergia, Custodian. Then we are seeing volume in terms of Gitco. We are seeing volumes in the, I always say Zenith. I don't know how you Zenith, UBA. So those are signs that even when prices are this high, within these levels, as Zenith has moved, there's no how with time UBA is going to follow that trend. GT is going to follow that trend because they've actually moved in pair group. So for now, we just have to wait. The market is up. I'm just looking for that hit the 50,000 points.
All right, I'm definitely looking forward. I'm looking forward to that 50K level myself. But what stocks are you expecting to take the shine this week?
I'm looking at, okay, for now, I think I'm looking at FTMB. PZ has started the new rally, but it's still, there's still more room for the uptrend. I think those are the two I'm looking for now. Then the UBA GT might start their own rally soon. It's all about support and resistance levels, depending on if we'll be able to break those levels, because GTCO, they find it difficult lately. I expected GTCO to have moved the same way with Zenith as they used to, but not now. But for now, we are actually the top two traded in terms of volume. It's GTCO and UBA. So I think those are areas investors to put their searchlight on for now.
All right, I'll be watching those stocks myself. Thank you so much, Mr. Abdul-Rashid Momo, FT Trader, TRW Stockbrokers. Thank you.
Thank you. Yeah.
All right, now let's move on to the Middle East. Let's see what's happening there. It's mostly positive sentiment we're seeing in the Middle East right now. In the UAE, Abu Dhabi, there's up 0.07%, and the Dubai index, 3,340 points. That's up 0.08%. We flip over now, we'll see Saudi Arabia there, the lone loser at intraday, 10,150 points. That's down 1.06%, and we see Qatar there up marginally by 0.03%. Well, the World Cup is over. Maybe we might see a rally in that market if there's any relation there. Let's move on now to Europe. See, European Union agreed to a first of its kind carbon tax on imports such as steel, fertilizer, and cement. Let's hear more now from Stephen Beardsley right there in Berlin. Great to have you, Stephen. So what exactly did the EU agree to?
This is a plan that EU negotiators have agreed to, and this still requires formal approval by the institutions of the EU, but it's a significant step forward. Essentially, this accords to the EU's plans to decarbonize in the coming years and their roadmap. It's been a very broad roadmap calling for a 55% reduction in emissions by 2030, and that's in comparison to 1990 levels. The nuts and bolts of that have always been very difficult to work out, especially amongst 27 nations with a variety of industries and branches. And above all, for heavy industry. Think of chemical producers, think of steel manufacturers. They produce a lot of carbon, but they also employ a great number of people across these countries, and they're very sensitive to overseas competition. So the real question over the past few years has been, how do you decarbonize these industries without forcing them to lose step to overseas competition? Now, to this point, it's always been handled with carbon certificates, and that essentially allows these industries to emit a certain amount of carbon as long as they have these certificates. They're supposed to buy them, they're supposed to trade them, but to this point, the great majority of them have been free so that they don't, again, lose step to overseas competition. This new plan, agreed to on Sunday, will speed up the phase-out of those certificates, meaning that there will be fewer certificates available, fewer free certificates. They will have to be traded, and essentially the price of carbon will rise. Now, in place of that will come a carbon border adjustment mechanism, and that's a lengthy word that basically means, imagine a kind of shield that comes over businesses here in Europe to protect them from lower-cost products that come in from outside that aren't subject to these carbon measures. And that will essentially be a tariff that raises the price of those goods to the price of a comparable good here that will be made under this new regime. So that's the idea, and it's meant to help these businesses and make it so that they will not leave Europe to go and produce elsewhere where it is cheaper.
And I guess we would get some pushback there. Why do some trading partners find the idea of carbon tax problematic?
Well, they say essentially it distorts trade, that you have different regions of the world that are different degrees of advancement when it comes to decarbonizing their industry. Look at South Africa, for example. The EU is one of its major trading partners, especially for manufactured goods. However, South Africa is heavily reliant on coal energy. That means that amongst EU trading nations, major trading nations with the EU, has one of the highest highest rates of carbon per unit of GDP when it comes to trade partners. And that's not going to be easy to change. So it's already at a disadvantage, and its firms are at a disadvantage once this regime goes into place. There are other critics who point out that many of the nations that are going to be negatively affected by this carbon border mechanism, essentially, are the ones who are poor and who are already subject to the consequences of climate change. So there's going to be questions of whether this is fair or not, but not just among the small nations, also amongst the U.S. and China has also raised red flags saying, look, you're putting our exporters at a disadvantage. So it's going to be sticky ground going forward.
All right, we'll keep tracking that, Stephen. What can we expect from European markets today?
European indexes all beginning the day in positive territory. That's in contrast to their counterparts in Asia and the way stocks ended up in the U.S. last week. There's some optimism still here in Europe that the economic forecasts of the past 6 months are actually were much more dire than the situation on the ground is. So there seems to be a kind of a bit of optimism here at the moment. The question is whether that will maintain, whether it will persist, or whether it will be dragged down by sort of the gloomier outlook that we're seeing really anchor into places, other regions, the U.S. and Asia, for example, where all eyes are on recession indicators, poor business surveys, and a general feeling that the interest rate hikes of the past 6 months are going to continue for the foreseeable future. Everyone is hoping for that Christmas rally that tends to happen at the end of the year. It's probably going to have to be led out of the U.S., and right now there's no solid sign that it's going to continue.
All right, everyone, they're looking out for the Santa rally. Let's see if that actually happens. Oh, Stephen Beardsey there giving us the details from Berlin. Now, moving on now, we see stock futures rose after major averages posted their second straight week of losses for the first time since September. Investors also struggled to shake off recession fears. We see the markets there looking quite positive. Up 0.30%, Dow Jones Industrial Futures there, 33,227 points. And we see the S&P 500, that's up 0.37%, and the tech-heavy NASDAQ up 0.47% at 11,397 points. While investors still looking out for all those recession fears, since the central bank there, the Fed, still looks like it's going to deliver more rate hikes after the 50 basis points rate hike we got last time in December now. So moving on to other markets, that's the global oil market. Now we'll see, let's check out what's happening with Asia first. See, Asia Pacific markets traded lower with greater Chinese markets leading losses in the region, despite government's pledges to stabilize the economy in 2023. There we'll see the Nikkei, that's down 1.05%. Shanghai Composite at 3,107 points. That's also down 1.92%, almost 2%. And HSI 19,352. That's down 0.50%. So we're seeing the Kospi there also down. It's all red, in those markets we tracked there. ASX 200, 7,133 points. That's also down 0.21%. Can't call that a sea of red right there in Asia. Moving on now to the oil markets, we'll see oil prices reclaimed ground after tumbling more than $2 a barrel in the previous session as optimism from China's reopening, oil demand recovery, outweighed concerns of a global recession. Brent crude futures rose 72 cents to about $79.76 a barrel in early trade, while the U.S. WTI intermediate crude was at $74.89 a barrel, up 60 cents. China, the world's top crude oil importer and number 2 oil consumer, is experiencing its first of 3 expected waves of COVID-19 cases after Beijing relaxed mobility restrictions. All right, we'll take a break now. When we come back, more stories on the African continent. Do stay with us. This is Business Incorporated. All right, welcome back. Let's unpack the insolvency and legal issues arising from the FTX collapse. There we see the contagion continues to unravel. Let's find out how investors in Nigeria can lay claim to assets on the exchange, as a former FTX CEO has been arrested and hearings continue in the U.S. Let's talk to Mala Meke, partner, Stren and Bland Partners, join us via Zoom. Great to have you on the show.
Thank you very much, Ladi, for having me.
Yeah, so it's still the FTX issue there, hitting all the headlines in the crypto space at this point, and also, other markets. We're seeing, the firm is looking at selling its functioning units, including Ledger X. What does this mean for investors?
Yes, I think that's a good move. I think it's good news for investors. Essentially, what is happening currently within the insolvency framework is that they are trying to sell off viable assets in order to bring in more money to the bankruptcy estate, or if you want to use the Nigerian terminology, that would be the insolvency estate. Currently, there are outstanding liabilities of about 2.4 billion. They've been able to recover only about 700 million. That's a total liability of about to creditors of about 3.1 billion. So there's still a lot of money out there. And so what they are trying to do is to bring in more money into the bankruptcy estate in order to be able to then ultimately disperse that to creditors. From an insolvency perspective, that would be done through a process known as the liquidation waterfall. In Nigeria, we have that. If you look at section 657 of CAMA, that's the Companies that Allied Matters Act. It has provisions relating to how you disperse this money. So ultimately, that's also what will happen in the US at the end of the day. So currently, what they are trying to do is to do a fire sale. Obviously, that will be sold below the market value, but ultimately, that's a good move, which is unsurprising. The gentleman who is now the CEO of the FTX is somebody everybody knows in the restructuring market. Recovered about 20 billion during the Enron scandal. That's John Ray. So I think they know what they are doing, and that's good news for investors and creditors, that ultimately there would be something at the end of the day in the bankruptcy estate for them to lay their hands on at the end of the day. Because these particular assets, which from my understanding is actually independent of FTS, are already losing market value as a result of what is currently happening. So if they are not sold off, they would be devalued down. The value would depreciate to $0. All of them have either undergone regulatory pause or some have even been put under administration. So I think that's the right move to make under the circumstances, and I think investors should be happy with that.
And obviously, investors in Nigeria also, will find this as good news. But I'm wondering how, users right here in Nigeria can actually lay claim, to the assets stock on the exchange.
Okay, so that's an interesting question, because it's not just about FTX. We get a lot of questions relating to how one could participate in cross-border insolvency proceedings, right? Unfortunately, currently, Nigeria runs what you can call a territorial approach when it comes to insolvency, which is sad. I could remember in 2018 when I was a member of the committee that did the work that bettered the current insolvency proceedings in CAMA. It was supported by the World Bank. The World Bank consultant was pushing for there to be inclusion of cross-border insolvency provisions. But unfortunately, we don't have that. So, so essentially, we don't have a cross-border insolvency provision that would allow sharing of information, that will allow some level of cross-border dissemination of information. Not at all. We are not even, we've not adopted the UNCITRAL model law on cross-border insolvency that was adopted in 1997. We've not adopted even the Hague Convention on Choice of Court agreement that was adopted in 2005. Countries like US, UK, and even South Africa has even they've all adopted the UNCITRAL model law on cross-border insolvency. So essentially, we don't have that officially now. However, what we have currently, because in the US, already the bankruptcy proceedings going on. In fact, they've been able to set up and appoint, the US Department of Justice have been able to set up and appoint the Official Creditors Committee, which is more or less akin to what you have in Nigeria under the liquidation procedure when you talk about a committee of inspection. So that committee, the Official Creditors Committee, is supposed to take care of those who would fall under, when you look at liquidation waterfalls, who would fall under unsecured creditors, which I think is where the bulk of Nigerians should be. So we'll just have to fall back to the good old provision, which is that, or the good old procedure, which is that if you are interested, perhaps what you would do is contact a local insolvency practitioner in Nigeria. Thankfully, what has happened is that the Corporate Affairs Commission has now licensed insolvency practitioners. And usually, for those who are licensed, you would have received training, and you will be a member of the Business Recovery and Insolvency Practitioners Association of Nigeria, BRIPAM, which is the affiliate of Install International. So what would then happen would be that the local insolvency practitioner, some of us who are licensed, would have pool of contact, pool of colleagues, whether in the offshore jurisdiction, which is where some of these exchanges are domiciled. FTX is set up in Bahamas, for instance, or even in the US and the UK. And then ultimately, they would be able to then, within the context of, for instance, the FTX issue, they would be able to then liaise and ensure that your interest is represented on the official creditors committee as per what is going on in the US. And at the end of the day, when disbursements are then being made to creditors, especially the unsecured creditors, that you get a bite out of the entire pie at the end of the day. So unfortunately, we don't have a formal proceedings that would have allowed us to, with dispatch, act in respect of this matter. But what would then happen would be some level of collaboration between your local attorney in Nigeria, who is more or less an insolvency practitioner, and then the International Council, who would then assist to ensure that your interest is well represented. So all hope is not lost, even though we would have advocated and would have loved the situation where we have standalone cross-border insolvency provisions. We did have something of that nature under the bankruptcy and insolvency bill that was passed by both houses of by the National Assembly in 2016, but unfortunately the president declined and said so. Currently, we don't have that, but there is still hope as to means of such recovery.
All right, still light, at the end of the tunnel. All right, we'll keep tracking how the proceedings go with the whole bankruptcy issue there with FTX. I want to thank you so much, Amalameke, partner, Stren and Blan, partners, for joining us today. Thank you so much.
Thank you very much.
All right, now let's move on to other stories now. We see the IMF Executive Board has approved a 46-month arrangement under the Extended Fund Facility for Egypt, an amount of about $3 billion. The package requires Egypt to implement a flexible exchange rate to increase resilience against external shocks and a monetary policy aimed at reducing inflation. The IMF said Cairo is also asked to increase social spending to boost the social safety net and wide-ranging structural reforms to reduce the state footprint. And the World Bank has supported Ghana with $13 million in grants for sustainable environment through its program ProBlue. ProBlue is a multi-donor trust fund administered by the World Bank to support the sustainable development of marine and coastal resources, as well as eradicating plastic waste. The workshop was to assist governments to develop a framework which will promote an economic system based on the reuse and regeneration of materials or products. And domestic electricity bills in Kenya hit a record high of about 26.29 shillings per kilowatt hour in December, as the power prices jumped about 6.3% compared to the previous month. Cost of domestic power rose on by increased variable charges, including fuel cost charge and foreign exchange fluctuation adjustment. Consumers are paying more for electricity this month after the Energy and Petroleum Regulatory Authority increased the FCC and FERFA marginally. And that's it on Business Incorporated. Thank you so much for watching. Join us again tomorrow at the same time. I'm Ladi Williams. Bye for now.